Chapter 15, Job Costing and Analysis. Cost Accounting Systems. Cost accounting systems are in place to measure, record, and report product costs. Remember, there's a difference between product cost and period cost. So cost accounting systems track product cost. Managers use product cost, that data, financial information, to be able to set product prices, to control the day-to-day operations, and develop financial statements. There are two main types of cost accounting systems for manufacturing: job order cost and process cost. And you'll learn about both of these during the remainder of the course. So here is a better explanation, more detailed, of those two types of accounting systems. So there are two main types. The first one is job order cost system. That's what we cover in this chapter. And that is more specifically for jobs or manufacturing processes that allow for custom or unique orders. So customized orders built to the customer's specifications. So a job order cost system provides product costs for each quantity of the product that is manufactured. Each quantity of product that is manufactured is called a job. This system is often used by companies that manufacture custom products or batches of similar products. So that's what we're talking about in this chapter. But just to give you an idea of the other systems so you can compare and contrast them, the process cost system, which we'll talk about in the next chapter, provides product costs for each manufacturing department or process. So whereas with the job order cost system that we talk about in this chapter, how costs are accumulated by job, what we'll talk about in the next chapter is how costs are accumulated by a particular department. So with that process cost system for next chapter, this is used by companies that manufacture like mass produce identical units, identical objects or products. So in the image you can see kind of broken down the difference between those two systems. So with job order costing, there are custom orders, diverse products and services that you can choose between, low production volume, high product flexibility to customers' wants or needs, and low standardization. On the opposite side of things, you have the process costing, which is very repetitive. It's similar products and services, high production volume, so mass produced, low product flexibility. They're all basically the same type of unit, and there's high standardization across the board with those products. So a job order cost system records and summarizes manufacturing costs by jobs. While jobs are still in the production process, they're part of an account called work in process inventory, because that's what they are. They're not just raw materials anymore, but they're not a finished product either. They are somewhere in the middle there. They are a work in process. Then as jobs are completed, then they become part of finished goods inventory. They sit in finished goods inventory until they're actually sold to customers, and then those costs are transferred over to cost of goods sold, because at that point the goods would have been sold. These are a couple examples of different products that you can see when they're in the raw material stage, then in the work in process stage, and then finished goods. So that gives you a visualization of what's happening with the products themselves, but that is also happening in the individual accounts. So you have a raw materials inventory account, a work in process inventory account, and a finished goods inventory account. So just as the actual physical product and those materials go through the different steps, those costs follow them for the entire length of the job until they are not only finished, but then sold. This example shows you a little bit more in detail what job order costing looks like. So instead of just showing you like raw materials to work in process to finished goods, this is a little bit more in depth. So it is showing how direct materials, overhead costs, and direct labor go into the process of creating something from raw materials. So these are going to be your inputs. So the materials, overhead costs like um, indirect labor or indirect materials that you can't necessarily trace to one item, such as like tape or glue. Obviously, you're not going to track that cost through a job. You can't specify one piece of tape for a particular product that you're working on. So that is just considered overhead. Those costs are kind of lumped together, but those are still necessary costs for production. So those are the inputs. Then you can see as jobs are being completed, they're not all being completed at the same time. So different jobs will be in different areas of progress as they're going through the manufacturing process. So you can see here, it looks like there are 3 separate jobs. So there's job B15, job B16, and job B17. It starts here with what is in work in process inventory at the time. During this period, what has happened is job B15 was completed and delivered to the customer. Since it was sold, it then becomes cost of goods sold on the income statement. So that's how costs flow through from the balance sheet accounts, because inventory is on the balance sheet, to the income statement as cost of goods sold. So that was that particular job. In the same period, another job was completed, but it was not sold yet, so it is not recorded in cost of goods sold. It is sitting in the balance sheet in the finished goods inventory. And then it looks like job B17 must have just started to be work in process, so it will be in the work in process inventory on the balance sheet. So there's a job cost sheet, which is a record maintained for each job. The job cost sheet identifies the customer, the job number, the costs, and key dates. Only product costs are recorded on the job sheets, so no period costs. Direct materials and direct labor costs that are actually incurred on the job are on this sheet. So we just looked at the 3 different jobs, the 3 different cars that were in production. So for job B15, that's shown on this job cost sheet, there were direct materials and direct labor cost of $700 and $1,000. So the estimated total cost would be $1,600, and we will figure out in just a moment how that calculation comes to be, because that is just an estimate. So estimated overhead costs are included on job cost sheets through a process, like I said, that we'll discuss later in the chapter. So for direct materials, there is an actual cost. Direct labor, also the actual cost. Then for overhead, that is estimated, because again, we can't accurately follow each tiny part of a piece of tape, a dot of glue that goes through each job. So we just have to estimate that at first. Then here you can see the link between the balances in the accounts and the totals on job cost sheets. So this shows you what I had already mentioned on the slide with the multiple vehicles that were in production. You can see the accounts that are used, so work in process inventory, finished goods inventory, cost of goods sold inventory. The balances in those accounts come from the information that is used on the job cost sheets. So you can see for job B17, there's work in process inventory. So that would show up in the work in process inventory account. Job B16 is in finished goods but has not been sold yet, so it will show up in finished goods inventory. And then job B15 has been completed, has been sold, so that amount will show up not as an inventory item on the balance sheet, but those costs that have been accumulated for that job now move over to the income statement as cost of goods sold. So you can see the costs of a particular item that's being manufactured flow through the financial statements, flow through the accounts, just as the product moves through the different manufacturing processes, ultimately being sold.